What do you think the biggest mistake you see people make with their money?
Finances are kind of tied to emotion, so people wait until the markets are at all-time high to buy in because they've seen the market grow and they feel that they're behind, and then they're just reactional. So then the first sell-off, they're like, I can't stomach this. They weren't built for it. That's why you really need to meet with somebody, is to talk through those emotions.
Welcome to the Studio 321 podcast, powered by Brightway, the Steve Trout Agency. We're sitting down with real estate pros, insurance nerds, mortgage masterminds, and local legends who are making moves on the Space Coast. Hosted by the best insurance crew in the 321. At Studio 321, it's all about community, real connections, and sharing a few laughs along the way. Strap in, let's launch into today's episode.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer and member of FINRA ESIPC. Advisory services offered through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Fagan Financial Group and Cambridge are not affiliated.
Today on the Studio 321 podcast, we're sitting down with someone who's built his career around helping people create a better financial future, both personally and professionally. Our guest is Jason Fagan, founder and wealth strategist at Fagan Financial Group. Jason has spent the past 17 years in the financial industry, helping families and business owners design complete financial plans that blend investments with insurance strategies to protect and grow their wealth. His motivation runs deep. When Jason was 18, his father passed away with all of his possessions in a single suitcase. That moment became the driving force behind his mission to ensure others never find themselves in that same situation. In fact, he keeps a suitcase in his office as a daily reminder of his why. Over the years, Jason's earned national recognition serving on advisory council for one of the firms he partners with and qualifying for top advisor conferences for 12 consecutive years. Outside of work, he's a husband, father, and active member of his community, serving through his church, his local gym, Trinity Fitness, and supporting several community programs. We're excited to have him here today to talk about building financial stability, the mindset behind money, and how the right plan can create real freedom. Welcome, Jay.
Welcome,
It's
Fagan.
good to be here.
So, man, dude, the stuff about your dad passing when you were 18 and the suitcase, man, that really is powerful stuff. That really touched me, actually, when I read that. Kind of tell us about that a little bit and how that's kind of shaped where you are today.
Yeah, my parents got divorced when I was 3, but I always had a relationship with my dad, even though he was in and out of state. Like, he was in all different parts of the country. And my mom, she did her best to provide as a single mother. I was an only child. She worked at Graham's Lounge, managed it in the daytime for like 20-something years. She always provided, and she always, I spent like actually my 6th grade and my 8th grade year with my dad because she thought that would be good for me to be around a father figure. And when I was 17, my dad got diagnosed with lung cancer. He was a painter and a smoker, and they gave him 2 years to live, and he had 6 months.
Wow.
And so I was telling my story in a mastermind that I was in. I wasn't even telling that story. They were just asking about life. And the guy who was leading the mastermind said, "You need to get a suitcase for your office." Because I said he died with everything he had in a suitcase. And when I was just getting into financial business, and I was like, that's when I realized what it was about helping people. And, initially I thought, if I don't even make it in this business, at least it's going to help me and my family, because nobody talks about money.
No.
Like, our parents don't talk to us about money because we're all embarrassed about what we don't have.
Yeah.
So my mom, she went over like how to write checks and then save money a little bit, but it's just like she wasn't confident in what she was doing. So she didn't want to give me false information. So it's just like, don't talk about it.
Yeah.
So that kind of just reminds me, Sarah got me a suitcase, a nice decorative suitcase for the office. And I see it and remember why I'm doing what I'm doing on a daily basis.
Yeah,
That's awesome.
That's
pretty
amazing.
powerful.
That's crazy.
Super powerful.
Yeah.
So yeah, man. So like basically, like you've been able to kind of turn a really negative thing in your life to like a super positive thing and something that drives you and is like your why, your reason of doing it, right?
Yeah.
That's pretty awesome stuff, dude. It really is. Tell us a little bit about your background and how you got started in the financial world.
I was 30 before I really realized what I wanted to do when I got older. I grew up in Merritt Island.
30's the new 18, by
Yeah. I grew up in Merritt Island. I went to BCC after I graduated. I didn't want to. Yeah, that's what it always will be. I can't.
Yeah.
Whatever.
Oh, yeah, it'll never be Eastern Florida.
Beer can college,
Yeah.
And I didn't want to be there. I would actually wait until my mom left because I stayed at home, and then I'd go to Target next door and sleep in my car until she left, and I'd go home.
Oh, my gosh, I used to do the same thing.
So, I never saw you there. So, so I failed, when she was paying for it, and I ended up getting like almost an associate's degree. And I was making decent money. I was working at the Space Center, and then I was like, man, my stepdad worked there, and he could get me a good job if I had a degree, any degree. So I was taking a class a semester in the evenings, and it was like boring. And I'm like, I got married, and I told Sarah, I said, I'm never going to finish unless I go full time. And she was pregnant with our oldest, and she said, hey, look, I'll work full time so you can go to school full time.
Wow.
So the only issue we had is we didn't have anybody to help us with Ava when she was born. So my mom was working at the time. She was working at the Space Center then, and she owned a bar of her own. So it was either we were going to move to Destin, Florida. We had friends there that pastored a church that could help. They had the flexibility. Or her parents lived in Champaign, Illinois. So family won out. We moved to Champaign. And I enrolled in Eastern Illinois and went to school for 2 years. And she worked, she taught. And I thought I was going to go work for an NFL team. I wanted to do business, and I wanted to come back to Florida. I want to live in Tampa. She want to live in Jacksonville. Whatever. We're going to figure it out. That's where we're going. Then I got to school, and I was one of those old people at BCC that were in the classes that I always got annoyed about when I was 18 because I was like 28. I'm like, this old person won't just shut up. So the career I wanted to go into, like all these 18-year-olds had thousands of hours of interning. And I'm like, I don't have time for that. I got a daughter at home. I'm going to school full time. And then I realized to make it in the NFL scene, you have to do ticket sales for forever and make peanuts. I'm like, I have a family now. I can't do that. So what am I going to do? We'll just figure it out. Just get my degree. And my brother-in-law was a financial advisor. And then he didn't like it, so he just was admin at a firm. And I said, hey, Josh, I said, can I come in and intern? And he's like, work for free? Come on. You can come in and work for free. So I came in. I had no desire to be a financial advisor. I thought it was all like a numbers thing, calculations, all that stuff, and it can be at some point. But yeah. I got in there, and the culture was great. And then I really realized that we were helping people. And then he left and he got married and moved to Texas. So I interviewed for his job as an admin for one of the top advisors. Nice. And he hired me. And then he was like, after a year, he's like, you need to be an advisor. And I'm like, okay. So I became an advisor, and he hired Sarah as his admin. So she has the background.
Yeah.
And then that started the journey, which gave a lot more whys. The dad thing.
Yeah.
And then, you want to quit. Then your why becomes like, I remember wanting to quit like 2 years in because it's a roller coaster on the income side and rejection, people not wanting to sit with you, all that stuff. You take it personal. But I remember having one client, and he was a Florida client. And I'm like, I can't quit on him.
Yeah.
And that becomes your why.
Yeah.
It's like the suitcase still becomes your why, but then that becomes your why too.
Mm-hmm.
That's awesome, man.
That is.
that's one person basically helped you not
Quit.
Yeah.
quit.
And now I have, 500 people that I can't quit on. Some of them, maybe.
I really respect the fact that your first inclination was, I'm going to go work for the NFL.
Yeah.
Don't really care how I get there. It's going to happen.
I'm going to work for the NFL. I'm
And
going to sit up in
you
one of
look into
those
that and go,
suites.
no, you're not. Nope. I have a friend in ticket sales, and it is a grind.
Yeah.
It is.
She was, and then she left. Then she went to go work for the Marlins. It's even bigger grind because the Marlins don't sell tickets.
Yeah.
You can't
That's
even
why
give
there
them
were
away. You can't even
openings.
give them away.
That's why they were
Yeah.
hiring.
So you mentioned Sarah,
hmm
and so she became the admin when you became an advisor,
Yep.
and now she helps you run the office, right? I mean, she's involved today with your
She
current
does.
setup?
She's not
HR.
as an active role. Yeah, she's HR. That's the joke in the office. But when we opened the Florida branch in 2009 and we moved back to Florida, she was able to step in, or sorry, 2019. She was able to step in and run the office, but the goal was always to get her to stay at home. So she did that admin thing for the advisor for around a year or two, and then she went part-time, and then she transitioned to stay-at-home mom, and she homeschools our 3 kids.
Oh, that's wonderful.
And they're in a co-op. Actually, Thursday's co-op day, so it's chaos at the house this morning, but she does that, but she understands the business, and anytime we have transition of staff, she's able to step in and kind of help out.
Awesome.
Very
Awesome.
nice.
Yeah. It's respectable homeschooling, too. Jeez.
Yeah, it's
That's a
not
lot.
an easy job.
No.
So you've been in it for how long now? What did we
17
say?
years.
17 years. So how has the industry changed from when you got into now?
Yeah. Well, when I started as the admin for the advisor, it was like 2008. So market 40% loss.
We're always hearing 2008.
Yeah.
So
So
that was the year.
That was the year.
I lived it. I got to watch it. I got to sit in on meetings where people were locking in their losses because they couldn't stomach to lose any more. And then they would wait. I watched them lock in, and they probably didn't get back in until the market totally recovered. So they missed getting back to where they were. So that's one thing, just market cycles, experience in the market cycles. Technology has changed the industry. Regulations has
Oh, I bet.
changed the industry. What can we say? What we're allowed to allocate portions of the portfolio to. There's limitations on that.
Is it more strict?
It's more strict, yeah.
Really?
So suitability, like they're looking at whether I hold and manage one account, they want to know the overall financial picture for the client, because they can't say, well, I'm managing this account, but they don't have anything anywhere else, and they need to make sure that the allocations are suitable.
Yeah.
And that's good. Some of that's good.
Yeah.
It's a lot more work, a lot more paperwork with anything. We got more paperwork. And then, technology leading into AI and dealing with robo investing as competitor, or what's in marketing out there. And the investment world it's so good. There's so much money in it that there's just lots of marketing on new strategies, new options, and then lately over the last 5 years, fees. Like there's lots of marketing on fees. So people I can do it on my own. There's, platforms that I can trade and do all of that stuff. So,
Yeah. How has AI kind of changed it as of recent? And are you worried about the future of what you do because of AI?
I'm not really worried about the future because I don't think that AI can ever totally replace an advisor because it doesn't have a soul.
We say the same thing about our industry.
Yeah.
There's just no way it can take
Yeah.
over.
Yeah.
I think it will take a market share. I mean, we've already seen it. There's different platforms that have had robo investing for a couple of years, and people are going to do their own thing. They've been using Vanguard for a number of years before that, but it's kind of puts it back on the client. There's no overall big picture financial. Like I could go into AI and say, this is what I want. Give me a financial plan, and it would. But what happens when, you need to replace the roof, or you want to go to Hawaii and take the family, or you want to buy a tract of land, or buy a business, or downsize, or any of that stuff. It's not able to accomplish that stuff.
Yeah. No, understood. But like Jay said, I mean, I feel like AI is definitely creeping into our industry here in insurance.
Yeah.
But I just feel like I talked about it before on another podcast, but it was, I just don't think that AI can really replace the human element of what we do.
Yeah.
No way.
That's
you
it.
know, and being able to connect the consumer directly with the insurance company, which is really our number one role.
Right.
And will it get there one day? Maybe.
Yeah.
As technology changes and the way people adapt the technology.
Yeah.
But in my lifetime, I think we're safe.
And I think there's different demographics too. So actually, I've experienced it more now with seniors that are more tech friendly, like jumping on webinars and getting educated and all that stuff because they're retired, they have time. But, like I feel like the younger generation likes more local stuff.
Yeah.
Like, they probably are on Amazon every day, but they're looking for farmers markets and different things like that and interact with, the human culture and nature. The one thing I am concerned about AI on, and I think is going to be an issue, is anytime somebody takes money out of an account, I can't take a trade on a voicemail or a text. They can request it, but I have to follow up with a phone call to make sure it's them because the money's going into the account. AI, I could call and have Steve's voice, and
that's scary.
Yeah.
Like,
and realize it's not really.
So, what are they going to do? The client going to have to come to my office? Well, I have clients all across the country. Like, let me make sure it's you, because I could be sitting on a Zoom and it could look like the client and not be the client.
Yeah.
And that kind of concerns me.
No, some of that deep fake stuff is wild.
Yeah.
That's pretty creepy.
Yeah.
Whoa. Yeah, you just blew my mind.
Yeah.
Just thinking about it, like somebody creates an AI of the client, you're saying, and makes a trade to wipe them out.
Right.
Yeah, wow.
Oh, wow, yeah.
Yeah, that's...
So even if if it's going to the account that they have on the file, then it shouldn't be an issue. But if Steve called me and said, hey, Jay, like I opened this other account and I want to move, this big chunk of money to that account.
Red flag.
Yeah.
It throws a red flag. So I have to take it to the next level, even if it's like, it sounds like Steve. I talked to Steve. Like,
looks like Steve.
Looks like Steve.
That's crazy.
That is crazy.
Does it smell like Steve?
Can't smell through the lens. Come in here. I have to smell you.
I need to just come in for a quick sniff. You got time at Thursday at 3 for a quick sniff?
Oh my God.
I mean, that is the biggest problem with AI is like there's bad actors in everything, right?
Yeah.
And there's fraud in every industry.
Everything.
And
Money
so
related.
like they're gonna figure out a way to commit fraud and to to screw people over. They're just gonna figure it out, right?
People will spend work harder to cut corners than they will just doing it the right way.
Yeah.
You know what I mean? It's like, I don't want to do it the right way because that's too much work. But I'll do triple the time and amount of effort to cheat than will just do it the right way.
Yeah.
That was the same thing with when your kids get older, is ask them to take out the trash. Oh, my arm hurts. Oh, my leg hurts. You're going 3 days, making up all the excuses to do it, and just take 5 minutes to do it.
Yeah.
I use that as a stupid example, but
No, it's a great example.
That's a great example.
Yeah.
Is there any misconception about what you do?
I think, budgeting. I think people are like, help me get on a budget. And I can help with that, but that's not something I really want to do.
I don't want you to see
Like
how
I
much
tell
money
people,
I spend.
when people come into my office, my number one goal is to see their current cash flows and just to work with those. I don't want to tell them to save more money. Yeah. Now, if they come in and say, I want to save more money, great. But I want to work on just their cash flows.
Yeah.
Because budgeting's like dieting. Like it has to be a desire of the person doing it because it's hard.
Very true. Yeah. That is hard.
So that, and then I think that people think that, like people always give me a hard time. You're always on vacation. You're always on vacation. They don't understand as a business owner because, most of those people that say that are W-2 employees. Mm-hmm. Like when I travel, I'm working.
Yeah.
I mean, we just did our family vacation last week we took the camper up to Maine. The first 2 days, Sarah pulled the camper, and I was on meetings in the passenger seat.
Oh yeah.
I'm like, and then
Now
you
that's
know,
reality.
Yeah,
there
yeah.
really is never a full like.
or I'm
unplug.
seeing clients too.
Yeah.
Like, you know, I'm stopping along the way to see
Yeah.
a client.
Oh,
I
that's
saw
pretty
2
cool.
clients on the way or on that trip.
All three of us know that.
Yeah.
Yeah.
All three of us have been on a laptop in a hotel room.
Yeah.
Or in a
I've already been
car.
through like 3 laptops already because I take it everywhere.
There is very few times that I shut it down, and it's been in the last couple years just because it needs to happen.
Yeah.
Yeah.
Where I actually take my email off of my phone. We have a team.
Yeah.
If it needs to get done, like I tell the team, if you need to call me, you know how to get a hold of me.
Yeah.
Yeah.
And they don't call me, but like if they need to,
Yeah.
they can.
Yeah, and same here. I think it has gotten a little bit easier over the years for us. You know, now that we have a team around us and we can kind of at least 80% unplug.
Yeah.
You know,
Yeah, Jason
while
was
we're
just
gone.
expressing that at the meeting. Yeah.
I've been pretty vocal the last 5 years with I have really good referral partners and everything. They're very respectful and they understand, you know, if it's something immediate, like you said,
Yeah.
you know how to get a hold of me and I will do what I can. But for the most part, yeah, unplugging, at least to me, is super important because when you show you're available, it's a give an inch, take a mile
Yeah.
sort of thing. And if you're available all the time, you're going to have to be available all the
Yeah.
time. I don't want to do
You
that.
have to set some boundaries just for the sake of,
Yeah.
your mental health.
Oh,
sure.
100%.
Yeah.
Yeah, I totally agree.
And then early on, you know, like when I was first in the business, you're just trying to survive, right? So
Yeah.
you're like
I'm
checking
available
Desperate.
whenever.
you're checking your
Yeah.
email all the time.
Yeah.
I never really took weekend meetings because somebody warned me if you open that up, like unless I'm traveling, then it's like it's a work day. But if you do that, then people are like, oh, you know, Fagan will meet with you on Saturday or you know whatever. It's like you don't want to open that thing. But I remember just checking emails all the time because I had time. And you'd be on vacation and you would get like a fire email and it would ruin your whole vacation.
Oh gosh.
So then as
Oh,
soon
yeah.
as I got to the place
yeah.
where I just go into my phone and take the emails
Yeah.
right off of the phone.
Yeah. And the thing too is like, especially for me, like we care so much about the business, right?
Right.
Like we work really hard on this business, and then when you see a fire and you're on vacation, that's like you said, it's all you can think about because
Yeah.
it's just like you want to solve problems. You don't want to leave anybody hanging. You know what I mean?
And usually you get it on a Friday where you couldn't do anything about it until Monday anyway, but your weekend has gone to crap now. Like,
Yeah. You're
seriously.
mentally checked out. That's
Yeah.
all you're thinking about. Yeah.
Yeah.
No,
like, oh, Monday, I got to deal with this. Like,
and
and then 9 times out of 10, it's not even that big of a deal.
yeah. No,
No.
Absolutely. Yeah.
Yeah, almost 10 out of 10.
Yeah.
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 I think we also forget that we have people with us during those vacation times and we're ruining their fun too.
Oh, absolutely.
I
I was
get it all the time.
reminded
You're
of
like,
that a few times.
I don't
Oh,
care
yeah.
about that roof over there, okay?
My wife's not scared to
Stop.
remind me.
Disconnect.
Yeah, I mean, you were saying about vacation, how people think, oh, you go on vacation so much. That's one of like social media optics that don't really tell
Yeah.
the whole story.
Mhm.
Yeah, it's nice to show you're with family and all that, but it's like, I'm not just sitting here.
Yeah.
You know, we're
That's
just.
why I just rather not post.
Yeah.
Post it.
I haven't the last few ones. I'm like,
I was gonna say it's gotten quiet lately.
Yeah.
Yeah.
It's nice.
What do you think the biggest mistake you see people make with their money?
finances are kind of tied to emotion, so people wait until the markets are at all-time high to buy in because they've seen the market grow and they feel that they're behind, and then they're just reactional.
Mm-hmm.
So then the first sell-off, they're like, I can't stomach this. They weren't built for it, and they're not meeting with an advisor too. So like that's why you really need to meet with somebody is to talk through those emotions
Yeah.
and give you peace of mind. Like it will come back, or like now's the time. If you have more, you might want to buy more because you're getting it on pennies on the dollar. And then not having a permission slip to take the risk. So one of the things that we do, try to do with everybody, it's their decision ultimately, is part of the plan is to build a buffer, meaning I want money that's not driven by a market. So when they call me, if the market's up, great, we can take from the market. But if the market's down, they can still take without having to lock in the loss. So when the markets sell off, like when the tariff thing happened earlier this year, our phones don't ring a bunch because
They did this time, huh?
no, they don't,
Oh, they
because
don't?
people know they've got that buffer.
Nice.
So sometimes they ring because people are like, I know we're good, but let's just talk through this. Okay.
It's
Or
like hurricane season.
I'm so bad with like finances, all this stuff we're talking about. Like,
or should I buy? Like, the markets are on sale. Should I buy? But like where my friends who are in the industry and they don't do the buffer thing, their phones are blowing up when there's a market pop.
Yeah.
So I think, just not talking to somebody because of driven by emotions and, not having a permission slip to take the risk. If I got that buffer, it gives me permission to be in the market.
Yeah. Yeah, no, I mean, like you were talking about, people waiting until the market's up, right? And that's probably the worst time to get in.
Oh, absolutely.
You should have already been in, right?
Oh, when conservative...
See, they get a little FOMO,
yeah,
and then they jump in the market.
Absolutely.
And then they panic when it goes down, right? Is that the...
Yeah, and I think working with somebody, you get to know a little bit about them. When my conservative investors call me and say, hey, I want to get into the market, I want out. Because that's it. They've seen the last 3 years have been double-digit increases.
Do you think some of that's generational too, like, or maybe even just age? Like when I was younger, I probably would have been a little more like jumping around investments.
Yeah.
And then as you get older, it's kind of like, dude, you're in this for the long haul. Just ride the wave.
Yeah, you got to take a risk when you're at least younger.
Yeah. You mellow out as you get older.
Yeah, but had you held on to some of that when you were younger,
oh, absolutely,
you would be,
I mean, when I worked at the Space Center, every time I got laid off, I would cash out my 401k and live off of those dollars until I got picked back up.
Oh, yeah.
If I would just left that money, I would have figured it out.
Yeah.
I would have made money somewhere.
Yeah.
Well, we needed it at that time.
Or I took out the max amount of student loans that I could when I was in college. Like,
man, I had some
We
money
needed
in
it.
my old job. It would be worth so much now.
I know we can
Took
cry
it out
about a
for
lot
no
of things.
reason too.
yeah.
Whatever.
No, but I mean that's the thing. Like when you're young, you just don't see that long-term vision of it, And then all of a sudden you're 40 and you're like, damn it.
Yeah.
What's even crazier? Like, let's say I was younger and I had a financial advisor, and you would
See, that's
say,
the
like,
thing.
oh, hold on.
You
You know
have-
what I would say? I don't care. I need the
Yeah,
money.
I need the money,
Hey, listen, that guy,
right.
he's dumb. You know what I mean? It doesn't really matter when you're young. It doesn't really matter what people tell you.
I mean, and honestly, that's kind of like people are like, well, what's your target market? And I'm like, people who are serious about their money. But for the most part, that's people usually around 50 because that's when they realize I want to retire in 10 years and I haven't done a good job. So I'm going to be intentional about it. The 20 and 30-year-olds, there are people out there like that. But guess what? Then they're going to get married to somebody who's not like that. And then it's not their money anymore anyway. Or life's going to change. And it's just, there's a lot less of the intentional people out there at that age just because it's kind of like how it's in our DNA.
So for families or individuals just starting out, what should they focus on first?
I think
debt, savings, or investing. How does that work?
I think, savings and debt first. And it's kind of like a good mix, meaning people are like, I want to pay off all this debt first. Well, guess what? If I throw everything I have at the debt, you're going to get another debt. Like you're going to have to put tires on the car, or the AC is going to go out of the house. And then you're going to have to go back into debt. So it's like looking at those cash flows and paying off the bad debts first and building up some savings. So when something happens, I don't have to just refill the debt thing. Like I've got some money there. Yeah. And then once you get that to a comfortable level, then work in the investment. And I'm not saying don't participate in your 401k until you've got savings. And I mean, if you're getting a match in your 401k, yes, like you're not seeing that money anyway. It's free money. You should do that. But I wouldn't get crazy into investing until you've built up the permission slip to take the risk.
I don't think there's many companies out there that match your
Not anymore.
401ks anymore.
How do you, so us being in insurance, how do you blend kind of insurance into your investments?
Yeah, absolutely. So we use a model that is got 27 financial boxes on it. And somebody shared this with me. I never knew it. I've used this, the teams that I've worked on since my career have used this model. If you fold the model in half, the top boxes are defense and the bottom boxes are offense. So like the top three boxes are how you protect your stuff. So how do you protect your car, your home, liability? Then it's how you protect your income, like do you have Social Security, do you have disability insurance? Then the bottom three are how you protect your life. You have a will and trust, life insurance, whatnot. So we really look at that stuff. because I can't build your financial wealth and then you get in a car accident and then it's up for grabs. I've done you a disservice.
Yeah.
Like I've got to make sure that the protection is there. So when I'm looking at it, I'm looking at, all right, and I don't care about the deductible on the car and home.
Yeah.
I care about the liability.
Yeah.
So 9 times out of 10, people come in and their deductibles are really low and they've got mediocre coverage.
Yeah.
And I'm like, all right, why do you have a $250 deductible on your car? Can you actually like ding somebody's car and it be less than $250? Or, you know, like whatever. Like, why wouldn't you increase that to $1,000 and take the savings? Because my number one goal is to not tell people to spend more money or save more money. Call Steve up and say, hey, if we increase this to $1,000, how much more money is that going to save me every 6 months? And how much more liability can I get with that?
Yeah. And you're saying put that difference into the investment.
Or no,
No, put it
just
into
that would be
protection.
a wash and get more protection.
Get more liability. Got it. Yep.
Because if I don't, in medieval days, everybody built their wealth in their castles. What did every castle have?
Yeah.
A moat.
Yeah.
So we don't have the protection. And then, you know, like then once we got the coverages where we need liability wise, then we're looking at umbrella policy.
Yeah.
Like, why wouldn't you have an umbrella policy for $1 million if you've got your retirement accounts are protected in the state of Florida?
Yeah.
Your insurance, like if you have life insurance, it's protected. But if I had a bunch of money in just stocks, not in a retirement account or mutual funds or ETFs, that's open.
Even other properties that are not your primary too. Those are not protected.
Right.
Yeah.
So like, you know, with business owners especially, I mean, make sure you get that liability and protection there.
No, absolutely. Yeah. No, because it can be, I mean, a liability loss is usually not small.
Right.
So any liability claim that I've seen, very, very rarely is it small. It's usually a max payout.
Every time.
Yeah.
You know, almost every time.
To avoid a lawsuit. Yeah.
Yeah.
Right. And then, I mean, and then going down, like protecting your income, like to be disabled. I mean, it took me a long time and I can provide disability insurance to clients. It took me a long time to sign up for it because I'm like, I'm never going to use this. But I don't know. I could get in a car accident.
Yes.
And Sarah's like, you'd have to be pretty disabled not to do your job. So I'm like, well, you know, there's truth to that. But I'm like, but if I couldn't talk, you know, or get to the office or whatever, like, so there's a protection there. And then life insurance, like, I remember when I came in, Sarah and I were first married, we met with my brother-in-law and he was talking about life insurance. And I knew nothing about life insurance. I really didn't. I knew that it would provide something if I died.
Yeah.
And I said, my dad died when I was 18 and he didn't leave me anything and I didn't love him any less.
Yeah.
And that was a true statement. But at the same time, it was an ignorant statement because if my dad knew that he could put $20 a month into something or whatever, to provide something if he died, he would have done it out of love, not out of need to do.
Yeah.
So I've got as much life insurance as they will issue me. If my income goes up, I apply for more.
Yeah.
And that's selfish because I don't want Sarah to get remarried if I die.
You're worth dead than alive.
Yeah, I told her, if I die and you get lonely, take the duvet out of the duvet cover, go get the Benjamin Franklins, put them in there. Ben will keep you warm all night.
Or just create an AI character on.
Yeah, exactly. I just heard that today.
That's creepy.
No, so like I'm a true believer in life insurance.
Yeah.
Everybody
Me
should have
too.
it.
Yeah. I used to say, like, if I step in front of a bus, the death benefit comes. I'm like, if I get pushed in front of a bus. But the other thing about life insurance, it's the one thing that will make all of the aspirations that I have for my family and legacy happen if I don't live long enough. So like, if I live long enough, I can make all that happen. But it's if I don't have to, it's done.
Yeah.
As long as I keep making that deposit or that premium payment, it's taken care of. Like a legacy is going to be had.
Yeah. Essentially, you just don't want their life to change, like lifestyle wise,
Right.
when you pass.
Right.
I mean, well, that's a
Yeah.
guaranteed thing.
Yeah.
Yeah.
Yeah. It's
That's
gonna
probably
happen.
that's the most guaranteed
Yeah.
insurance you're gonna have is life
Exactly.
insurance.
Exactly.
Yeah, for my family, you know, and terrible to say, but I've lost a lot of family members. Not one of them had life
Wow.
insurance. I think 7.
Yeah.
Not one.
Yeah. So
Wow.
if something happens to me and Sarah starts a GoFundMe,
She don't need it.
it's like, just cancel that account.
Somebody created that.
That's funny.
That's crazy.
Are there any different strategies for business owners versus W-2 employees?
Yeah.
And like, how do you look at those two things differently?
Yeah, so there's a lot because W-2, you're really limited on what you can write off. So I'm always looking at
It
permanent.
reminds me of the Seinfeld episode. You don't even know what a write-off is.
There you go.
No, but they do. And they're the ones writing it off.
Yeah, I'm.
He's like, I've never
much
watched the show.
Seinfeld.
I don't watch
I did.
Seinfeld
I
either.
watched a few, but I'm
Nah,
like, whatever.
nah.
Like,
Sorry, man. What are you talking about, dude?
It's
I'm here.
a joke in the office.
Oh, it's
When-
been 12 years?
When I buy lunch, everybody will go, "That's a write-off."
Yeah.
And we do that skit all the
Yeah.
time. Sorry, I couldn't help
so
myself.
now just ask him if he's looking for a write-off. You looking for a write-off today, Steve? No, so I'm like, there's lots of write-offs you can do as 1099 versus W-2. I'm always looking for permanent write-offs. There's also some things you can do savings-wise, you can contribute to a SEP IRA, different things like that. I always try to discuss with the client, is it a permanent write-off or is it just a deduction or a temporary write-off? So the CPA's job is to help you save taxes this year. My job is to help you save taxes over your lifetime.
Got ya.
So I just read the news today. We're 38 trillion in debt today. Like, just now happened.
Yeah.
Maybe because of the renovations, 1600. But I don't know. Where do we think that taxes are going to go? Up, down, or stay the same? I'm trying to have that conversation with people. And in certain situations, and for them, taxes might go down in the future. So you might want that deduction today. But if I put money in this SEP, I've just postponed that tax calculation into the future. And if I went to a bank and asked them for a loan and they said, here's the money, what am I going to ask them? I'm going to ask them, what's the interest rate and when do you want it back?
Mm-hmm.
And if they go back in the back, they're like, good question, let me go check. And they come back and they're like, we're good. We got so much money back there.
Yeah.
We'll tell you when we want it back in the interest rate.
Yeah.
I'm not taking that loan.
Yeah.
But that's what we're doing when we defer the tax calculation. So does a SEP make sense, or does it make sense to put it in an after-tax investment like a Roth? It's not helping me this year. So, if I make that decision, but it might help me over my lifetime. But there's things you can do, like as a business owner, can the car business buy a car, and depreciation, advanced depreciation, all that stuff. But I always try to really go over with my business owner clients, like, what deductions can you be taking that you're not taking? Like, what expenses are going through your hands that are really business deductions?
Yeah.
And if you're a W-2 employee, you can take none of that.
Nope.
Yeah.
So when I travel, I try to travel where I can see a client or have a board meeting.
Yeah. So for the business owner, it's like, how do we move some money around, maybe, pre-tax? And then for a W-2 employee, it's all post-tax income, right? Unless you're putting it into a traditional IRA
Right.
or 401k, then
Yep.
you get a deduction on your income, correct?
For sure.
Is there anything for a W-2 or an employee that they should be thinking about more?
Yeah.
That maybe they're not.
Yeah. They've done a really good job on the tax side of it for
Yeah.
doing that. But I would think just thinking through when I'm contributing to my retirement, like, does it go into the traditional or does it go into the Roth? And, yes, it's not helping me today.
Yeah.
But what I often see is people come in and they're putting a full amount in their traditional. And guess what? They have a home and they itemize. So they're writing off that mortgage interest. They have kids, so they're getting child tax credits.
Mhm.
They have all these deductions already and they're getting another deduction. And then when they're retired, the house is paid off, so that deduction's out the window. The kids are gone. So yes, they might have less money,
Yeah.
but they have no deductions. So, and we don't know what the tax rate is.
Got you.
But it's looking at, I mean, if tax rates stay the same, it doesn't matter if you do a Roth or a traditional. Like,
Yeah. Do you recommend putting into your Roth up to the max before making other investments, or should you put it up like maybe to a match if you're at an employer that has a match? Should you put it to your match and then make other investments, or you understand what I mean?
yeah. So that's all situational
Yeah,
to one's, where they're at. I always say if it's a dollar for dollar match, that's free money.
Definitely do that.
Yeah, definitely do that. Sometimes if it's not dollar for dollar, then I'll say, well, you might want to think through that. They're the ultimate decision makers, but I just try to bring financial sense, but they've got the emotional side of it too. So whatever they want to do there. And then, the power of having it outside of an employer plan is on a Roth, whatever I put in, I can get back out without restrictions or taxes or penalty.
Got you.
So if I did it on the personal side, I have access to that principal if I needed it.
So if you have a Roth outside of an employment plan, you could essentially maybe take that money out to buy your first house
Right.
for your down payment or help you
Yeah.
there. And there's no penalty, or you don't pay any taxes on that.
As long as you can take out what you put in, as long as the account's worth more than that.
Got you.
If it's worth less than that, you
Yeah.
can't take that amount out. But
And they allow you to do that. Why? Because you already paid taxes on that money.
right. The
Gotcha.
growth, you have to wait until 59 and a half. If
Got
you
you.
try to take the growth out, you're paying taxes and penalty to get it out before.
Yeah, got it. What are some smart moves business owners can make to protect themselves long term?
Well, I think going back to, it's not just business owners, it's everybody.
Everybody.
Yeah.
The protection. Like, what wins championships? Defense. Like,
Got it.
that's a sports terminology. We're in football season. Defense wins championships. Like, if you're not protected, you're at
Yeah.
risk.
Yeah.
And you can build a great empire and have, the bigger the empire, the more predators.
Yeah.
Yeah. Ain't
So
that the truth?
if you don't have your protection, it doesn't matter how much money you build. So I think that would be helpful, and having a buffer, because I like to think of it the positive way, not just the negative way. What happens when you need money, and not just like, oh, COVID happened and the market's in the tank and I need money to live off of? No, there's opportunities. When the markets cycle off, it's not just because I need it for an expense. I need it for an opportunity. If I came out, my neighbor told me what somebody offered him for his house the other day. I think he's full of it, but
Yeah.
if he came to me and told me that
Is
he
he gonna
would
watch
sell
this?
it to me for, he would sell it to me for 50% of that value. Likelihood is the market's in the tank, right? Because
Yeah.
his portfolio's down. But I would want to buy that because it's on sale. Well, if the market's in the tank, what am I going to do? Sell my stuff that's down 40% to buy the house, or down 50% to buy the house?
yeah.
If I have the buffer, allows me to stay invested for the recovery and still
Gotcha.
get the opportunity.
So one thing I think that a lot of people struggle with is, and I'm guilty as charged, and I'm probably in this room the worst offender,
He
is
swipes his card a lot. No, just kidding.
living today rather than living for tomorrow, right? Like,
Yeah.
For sure.
I should be way better off than I am, but I definitely enjoy
Same.
nice things and spend money, and
Same.
it's saving is difficult, man. So like,
Right.
how do you like work with your clients to kind of pivot that mindset?
Well, it's good news because I'm a spender.
Yeah.
So
mean,
I know that's in me.
Yeah.
But a few years ago, I realized, it was probably more than a few years ago now, this happens when we get older. I realized, like, I can't reinvent who I am, and I can make myself get better savings habits, but I just need to know who I am and just pivot off of that.
Yeah.
So what I do is, as my income goes up, money doesn't build up in my savings account. It won't happen, because I'll look at my bank statement, and I don't know why they do this, but they just tell the total at the top. So I see what's in checking, savings. So I just see the total. So I'm like, let's go to Orlando for the weekend, guys. Like,
Did that last weekend.
like, let's go to Mexico, like whatever. But so as my income goes up, I just turn on my automatic contributions into investments, my buffer, my savings, retirement. I just increase them.
Yeah.
A good rule of thumb is I want to save 20%. Sounds real easy until you make more money and then you put a dollar sign behind it and you're like, whoa, that's a lot of money. But if for every dollar you make, if you give 10% away, you save 20 and you blow 70, isn't that enough? Like,
yeah.
I mean,
If you tell us yes.
I think it is.
No, I mean, when you break it
in
down,
that perspective, yes.
70% of what you're making, I'm blowing. You're like, oh man, I'm a crap bag. You know what I mean?
Yeah,
Why do I
like
need
that sounds
much?
easy, but if you're a spender, I think it's just like making those automatic contributions get out of the bank account. You gotta go spend 70%.
No, I need to update my bank because that is brilliant.
Yeah, no, I love the way you just put that though.
Yeah,
I mean,
100%.
like,
It doesn't make you feel so guilty.
No,
Yeah,
not at all.
yeah.
That's a great point.
You hear that, Tarek?
But if I don't save
Sarah.
20,
No,
I'm not
the
going to be able to
spender.
spend in retirement. And I mean, I think that's like, people are like, oh, the CPA, a CPA I was interviewing said, hey, you're going to make less money in retirement. I'm like, why? Well, you'd be retired. I'm like, how can I afford to live off of less than I can, live off of today? Like, I can't afford to live off 100% of what I make today. How am I going to afford that in retirement? Yeah. So it's like, people think, oh, you're retired. She's like, well, you'll have less expenses. I go, what, my mortgage? Maybe.
Right. Maybe.
But my mortgage compared to my credit card statements is peanuts. So like, I'd rather have that payment. It's set in stone too. So
That's a good point too.
the first 10 years of retirement, I think, are the expensive years. When I travel, I spend more money than when I'm working. What's the first 10 years of retirement look like? I got 3 kids. They might be across the country. Go see them. We're empty nesting. You're still young. You're traveling. So it's just expensive. You're buying the kids, grandkids stuff, all this stuff. Like, I don't want to say, oh, I'm going to take half of the income that I'm taking today. Not a good plan.
Yeah.
So I have to know that money's not gone. It's just there for another day.
Yeah.
And maybe it's there 5 years from now, like you have your retirement stuff, but you also build up investments and savings outside of that for, hey, we want to change houses, or we want to buy this plot of land, or whatever. We want to take the family to Hawaii.
Yeah. How do you feel about real estate being mixed into an investment?
No, I think real estate's one of the best investments.
Yeah.
Not saying that you should buy at all-time highs, but like, I think the best investment that one can make is a business that they own. That's because you have material participation in that business.
Mm-hmm.
So you can, there are markets that factor in, but you can help offset some of that.
Yeah.
Real estate, the same thing. I look at it like an investment or a business investment, because I can do things. I can rent, I can sell, like I can remodel. I can do things where, other investments I can trade.
Yeah.
And that's good, but
not as much flexibility.
Yeah, right.
How do you, if you do have like somebody that, very young and they are motivated, the young ones, like what do you do, like encourage them to do right now?
Yeah.
Great question.
We just get something that's set up where it's systematic, where we're,
Okay.
And depends on how young. Like if they're just going to college, well, a lot's going to change in that 5 to 10 years. So I want to be saving money, but I don't want to tie it all up somewhere where I can't touch it until I'm 59 and a half. I want the flows to happen, but I want ability to go in there and get that down payment for a house. So it might be a Roth IRA, but it might just be a regular investment account that has 100% liquidity to it. Or they get married. Like, we don't know what that's going to be like, because now you bring in another person. They might not like, the way that you're living. So just building up that savings. And like I said, it's like throwing a dart at a dartboard. We just have to throw it, see how close we can get it, and then adjust. So we might start at a certain amount a month, and they might be able to do more than that. Or they might say, ow, that's painful. So we dial it back. And the good news is, if it's not in a retirement account, if they need it, like that money went in the investment account and they need it, we just send it right back to them.
So pivoting a little bit to your the community and some of the things that you do here. So you serve at your church and at Trinity Fitness. and support local causes. How has giving back shaped your view of success?
Just you learn more when you help, when you teach, than just receive. So giving is multifaceted.
Great
Like
life
when
lesson.
you give, like we're building a team at Fagan Financial Group. Like I could just get complacent and just say, Josh and I have it, like it's comfortable.
Yeah.
I want to help people make careers, change their family's legacy, so a lot of the serving is just internally in the office too,
Yeah.
The stuff that I do in the community it's been great for me. Like, Trinity Fitness, I enjoy that gym, loved it. It's kind of been like a great community for me. And I said I'd be a trainer. I didn't want to be a trainer. I just wanted to help.
Yeah.
And then they asked me to be the chairman or they asked me to be a board member, and I'm like, that's more my speed. So I got out of the training, was a board member, ended up becoming the chairman of the board of the Space Coast Gyms. There was 4 of them at the time. And then after my time was done there, like, I'm really just not like, I don't want to be trained. I just want to come and work out and make bad jokes, really.
Yeah.
And they
You're
laugh
pretty
at
good
them.
at that.
So
You're
yeah,
pretty good.
they laugh at them. So I think it's like, but I decided to get back into training just to help. And it's been great for me because part of Trinity Fitness is you get up and you share a little devotional before you work out.
Yeah.
And it makes me be active in my faith.
Yeah.
Because if I'm just taking it in and not sharing it, like, what good is that?
Yeah.
So I think anytime you get involved in any initiative, it's putting, action behind your
Practice
faith.
what you preach.
Yeah, exactly.
Absolutely. So like in our business, we do a lot of like different marketing and different things to kind of keep our names fresh in people's minds. And mostly it's related, towards the real estate industry.
Yep.
Like, what do you do as a financial advisor to kind of market yourself, and what does that look like?
Yeah. So pretty much for the majority of it, it's just been word of mouth.
Word of mouth, yeah.
I do a bad job at it. Like I should be reminding people like, hey, the only way we grow our business is you sharing our name with the people you care about.
Yeah.
And I don't want to be like pushy, or I don't want that at all, but I do want to help more people. Like if my calendar, my work days are not filled with back-to-back meetings, I'm not living up to my abilities. So a perfect day for me is sometimes I'm like, this week, back to back to back for 3 days. But I'm like, this is what you wanted.
I know. Be careful what you wish for.
Exactly. But it's like, it's fulfilling. Josh Ellis in our office, he started a weekly webinar on long-term care because it's a growing issue in the community and the country. So he does that. We sponsor like Little League and high school stuff. And then starting in 2026, we're going to start doing some monthly seminars just on certain topics, just to kind of like people who are intimidated to come through the door, just come to this dinner and see what we're about. And then if you want to come in and meet, great. And I'm doing that mostly because of the new guys, the new crew. I want them to have some activity.
Well, one of the things I love that you were doing, I've been to a couple of your events. One you held at your house, and you had a chef come in, but you had a lot of your other clients there, and you do kind of like a 10-minute talk on some finance stuff, but then we all get to kind of hang out and we're all in that. I liked it because you're in the room with a lot of people under that same mindset, trying to figure out, how to invest better, how to be better with their money, you know what I mean? And you get to have those kind of side conversations with others in the room and stuff.
And that was, I got some marketing out of that. That wasn't really the intention. So that I started an advisory council when we moved back when the house was built in 2020. And the goal was like, how do I get better in my presenting to clients and sharing? And what do people want to know? Because like, I can't be like, hey, Mr. Client, you tell me what, how did I do my job? Rate me. Like, I mean, maybe I could, but I don't want to look at that. So a friend of mine in Cleveland, who's an advisor, said he was doing these advisory councils, and he reached out to, 6 or 7 couples in the community that he respected in very different walks of lives. And he went through, like, he had them commit to once a quarter and do it in a year. And then he'd run through another group of people. And he would present for 15, 20 minutes, share, get some feedback, and then they would do something fun. And, it worked out great. Like, I got the good feedback. And sometimes, like, people are like, well, we really don't have anybody, or, we don't like our guy. Like, and that's never been the intention. I never asked anybody for that. But I think when people understand what you do, and that was my hope, is you're going to help me. But more importantly, you're going to know what we practice at Fagan Financial Group. So if you see anybody in the community that needs somebody and we can help them, you know what we do, not like, Fagan's a financial advisor. What's that mean? Budgeting, right?
Budgeting. Exactly. That's all you budget.
Before we wrap up,
Okay.
We gotta get some rapid fires.
We got to get some rapid fires in.
This guy's too funny not to have those.
You are funny.
Yeah, we like to do some rapid fires at the end here before we wrap up.
Yeah.
So let's get started here. Favorite local restaurant on the Space Coast?
Pacific Rim.
Good one.
We just had that
yeah.
last. When do we
So
have that?
Shout
love
out Robbie Amino.
Yeah, exactly. Love the crew there. Always like go-to lunch spot. Don't go there for dinner much. And then the other places, Rising Tide. And I think that's more nostalgic than anything. Like Sarah and I, if we ever need a date night and it just needs to be quick, we'll just like, kids, here's dinner, or we'll get a pizza from the Moose, and like we're going to Rising Tide, and we have the same routine when we get there. Like we split an appetizer, we split a sandwich, and have a couple
cool.
drinks,
That's a good way
and
to
we
do it.
usually just sit right at the bar.
Well, call me and Diana.
Okay. We're like,
We're in.
West Side, East Side, Chris Foley, like, let's meet up.
Exactly.
Meet at Courtney.
Exactly. Are you a coffee, tea, or energy drink guy?
My wife would hate this. I do a daily energy drink around 2-3 o'clock. I'm trying to wean myself
That's
off
my
of that.
time. Ooh.
I love coffee in the mornings, but I am trying to get off the energy drink. But when you get up at 4 a.m. too, it's like it's either take a power nap or a bang.
Is that what you have?
A bang.
Yeah,
Bang?
a bang.
Oh my god.
Those are
Bang
the-
or rain. It's
those
got
are
to have
actually
300 milligrams of caffeine in it. Otherwise,
Yeah,
that ain't
it's
going to
pretty-
touch me.
I was drinking those for a little bit as like my pre-workout when I was at Indian Harbor Beach.
They're all bad
and then
for
I
you.
thought I was gonna have a heart
Yeah,
attack.
you got to be careful with
Yeah,
those.
I got the cold sweats. So
You don't drink those anymore.
Best money advice you ever received?
Save more.
budget. Go to Fagan Financial to budget.
Yeah.
So is that the same thing you would tell your 20-year-old self?
Yeah, I think start saving, investing sooner, not living for today, like for, until I got to 30. And then, my uncle told me when I graduated high school, you start putting your money in a Roth IRA. And I'm like, what money? But in hindsight, it's like I was getting rims on my car, exhaust, like, like going to Orlando, go to the club, like whatever. It's if I just made it simple, $50 a month, $100 a month, you don't miss it.
Yeah. So for not living for today, what's your favorite vacation spot?
Oh, gosh. That is tough. Oh, my.
For not living for today.
I don't know. Like, I love Europe, and I know there's a lot there. Sarah and I were talking about what's our favorite country in Europe, and we think it's Italy. Like, we didn't really like Italy when we went the first time. We didn't like Rome the first
I was
time,
gonna
but
say you went to Rome, didn't
yeah,
you?
Italy, and then we went back to Rome again like 2 other times since then. And it's like a big city when you first go, it's just overwhelming. You appreciate it more when you go back. So I don't know. That's tough. You're up for a win just because there's so much you can do there. It's not just one place. But I'm a beach destination guy, so when I think Europe, like I want to go to the Greek Isles again, or like Sardinia. I've never been there, or stuff like that.
You've ever been to Austria?
Yeah.
Austria? Yeah, that was my favorite part.
Put another shrimp on the Barbie.
Good day, mate.
Good day, mate.
Good day, mate.
Awesome. Well, we'll end it right there.
What did you say? Yeah.
I appreciate you, again. I appreciate you coming in. It
that's
means
fun.
a lot.
It's good.
How can people find you if they want to hook up with Jay?
FaganFinancialGroup.com. And, we'd love to see you at an event. We're always like willing to help. Like, we don't charge a fee to come in and chat. Any way that we can help, we'd love to serve people.
Are your events on your site?
Yeah, they will be. Yeah.
They will be.
Okay, awesome, man. Appreciate you.
Yeah,
Thank
that
you
was
so
awesome.
much. Let's get out of here. Love you, dude.
Love you too.
That's a wrap for this episode of the Studio 321 podcast, powered by Brightway, the Steve Trout Agency. We can't thank you enough for being part of our journey. If you enjoyed this episode, be sure to subscribe, leave us a review, and share it with a friend. Until next time, 3, 2, 1, we're out.